Is it possible to get almost 100% dividend yield on an investment? So in this video, I'm going to talk about an opportunity that is a private company that will be paying a dividend, and it's going to be public hopefully later this year or early the following year. And at MC, we invested in it before because they grow cannabis. So I'm not going to show any pictures of cannabis in this video because YouTube is going to go have a fit and block my video or red flag it or whatever. So when we invested in it before, now we have another opportunity to invest in it again to finish the project that we started. And so because it's a private company, if you want to be involved in it, now is your chance again. You need to become a member of MCE, and the link is in the description below. So I'm going to play you some clips from a 2-hour call we had with the company yesterday. And I'm just going to kind of comment and walk you through it. But the bottom line is that we're investing at about 25 cents, and the projected dividend is going to be close to 25 cents. And you'll hear it with your own eyes. It's a projected, so it might not, pan out, but you will hear it with your own eyes. So let's go ahead and get started.
Beautiful day, and wanted to be able to share the progress we've made here in the dispensary, and in fact kind of give you a bird's eye view of where the dispensary is located. I'm going to turn here so that you can see Highway 394.
So the first thing that I want you to see is what's behind him, right? Is the dispensary. And when I was there physically myself about 6 months ago, there was nothing there, okay? This is the footage that I took when I was there about 6 months ago.
This is the 6 acres we own here for the site for Highway 395 dispensary. This pad right here.
Now notice the cars that are going by, how close it is. I mean, it's on the highway. 200,000 cars per day.
Is where the dispensary will be put. The entry will be right over there on the street.
This is the footage that I took from the road, actually, 6 months ago. And then dispensary is like right here. Well, obviously this is the old footage, but that's where it is. So that's how close it is. It's like fantastic location. It's like, McDonald's type of location.
Beautiful day, and wanted to be able to share the progress we've made here in the dispensary, and in fact kind of give you a bird's eye view of where the dispensary is.
Yeah, so what's behind him, it wasn't there. This is what they've done so far in the 6 months since I've been involved.
Located. I'm going to turn here so that you can see Highway 395. Hopefully you can see that behind me. As many as 200,000 cars a day transport from people and goods and services from Southern California to Northern and Eastern California on this highway. It's the single largest route, Eastern California. So significant route. Between the dispensary and the highway, nothing can be built because of these high tension wires that are run along the highway. There's a 120-foot setback.
And also nothing can be built there because they own the entire property. So that dispensary will not be blocked ever.
Which means that nothing will ever be in the line of sight between the dispensary and the highway. We also have signage ability here that's going to be significant. Obviously be able to be seen from the highway. And I'll go back here, pan back to
Now
the
you
dispensary.
drove on the road, and how visible is the building from the road?
You can see it from about a half a mile to 3/4 of a mile away. So,
And then
yeah,
you're gonna have a big billboard on top of it, right?
yeah, we'll have a billboard that's above the. Actually, it'll be a separate sign that'll be probably off to the left of the building here, and it will be.
Now look how big it is in comparison to this person standing there. Like on the picture, it looks, oh, it's nothing. This is huge.
It'll probably begin at about 24 feet and go up probably to 35 feet at the top. So.
Yeah, this is just gives you an idea of the outside of the building. This is obviously the entrance door where customers would walk in. That door, this would be
Right? So keep in mind that this is how much progress they've made, but it's not finished. Okay? It needs about $500,000 to finish it. And that's why we're investing more money in it to finish it, because the finishing of it allows the company to sell what they grow, not at 1,500, but at 4,500. Major improvement in margins and really no additional costs.
a secure door entryway for employees. So this was the door I just walked by. Come in here, and this is the lobby area where people will sign in, sit. There will be a wall right here with a door to let you back into the purchasing area. And this would be the purchasing floor right here, with storage for excess product back there, intake for vendors, big door back there to get incoming product in, counted and tagged. Right here is our drive-through window with the box right here to push out so that people can grab their items.
So this is a big deal, okay? This dispensary is in California. There's only 3 dispensaries in the entire state of California that are allowed to have drive-thrus, okay? That's it. And this one is one of the 3. The other 2 are located not in such great locations, but this is a big deal. And you're going to hear more comments about it later.
This is obviously boarded up, but the window is right behind it. So customers can pull up, and we drop items here. They take them out there. It's all done, bought through your phone or computer, bought online, and they would come through and pick up their items. But this is the interior of the building, and I'll walk to the drive-through window on the outside.
See how big
That's
it
what
is in comparison to him?
I'm most excited about is seeing people lined up, picking up items.
Is the wording drive-through going to be on the billboard or sign?
Absolutely. Yeah, that's the staple. That's the unique piece about this dispensary. There's only 2 of them operating currently in the state of California. So that is going to be a big piece of marketing for us everywhere.
Like this dispensary alone, like will get them, and it's already generating interest, will get them free time on the radio, like because it's like a landmark. It's such a big deal because it's so unique. It's not allowed.
As well as the fact that the stadium, the baseball and soccer stadium, is directly catty corner to us on the other side of 395, where all the concert events and sporting events happen. It seats around 16,000 people. in total. And so you also have a significant amount of traffic there. This corner at Rancho and what have you is being developed. There's going to be a shopping center on 17 acres across the street from us, which again will create even more traffic and obviously more awareness of the dispensary and where it's at. So again, significant opportunity here. Again, there's 1.6 million people in the high desert. There are only 3 dispensaries, and the other 2 do not have drive-throughs and are not on major highways.
Now,
So I think,
how far is the stadium? You said?
well,
So if you can see my screen, so you can see a structure just past the electric poles right here. If you look at my finger, the stadium is right below my finger on my screen.
How
in a
long
golf,
does it
it's
take
probably
to,
a,
how long does it take to drive there from?
Oh gosh,
it's 500 yards. It's a five.
Yeah.
It's a
It'd be
par
a-
5.
It'd be a 5-minute walk from here.
Yeah.
Am I correct? Is it going to cost another $500,000 to finish the dispensary?
Approximately.
Approximately, yes.
Probably less, but yeah, that would be. We got a number that's a little over 400,000. So with some safety margin there, 500 is. We'll get this finished and operational.
Of the other companies you took IPO, how is their dividend policy today?
Well, I've never had a company that was a cash type company before. So this dividend concept will be the first that I've been able to do. The fact is that this is a very cash intensive, and this will be a very profitable project on a whole number of levels. You're going to see when we get to the manufacturing side why that's going to be. So they are a vertically integrated cannabis company. They grow everything themselves, and then they manufacture the product, and then obviously with the finishing of the dispensary, they'll be able to sell it through their dispensary. But now each of these verticals, not only does it provide for a product for the dispensary, it also makes things for other companies. So for example, when they grow, when they cultivate, and then they have clones like mothers to grow, they have the capacity for 50,000 clones per month, but they only need 2,000 for their own selling, and then the other 48 is for other companies. So they already have a contract. You'll hear it to provide 40,000 clones per month to another company. So that business again, and then also so that business again grows for them, and then it provides other services for others. And then also on the manufacturing side, they manufacture the products for their own, which with the finishing of the dispensary, they can sell at a higher price, but they can also manufacture for other companies. So it's very interesting. But the fact is that with the number, we may be doing, 50 cents of profit per share. Right. So think about this, what he just said, 50 cents per share. We're investing right now at 25 cents. So just throwing it out there. There's not a lot of places for that money to go. I'm not sure that aggressive expansion or anything else is in the best interest of the shareholders. Obviously, once we have everything operational, we're going to have an AGM, and we're going to have everybody vote on how they'd like to distribute the profits. But the fact is that this is going to be a very profitable project. I mean, just when you see the grow and you see the manufacturing and everything else that's going on with Optimus, something has to happen with the money. So I don't see that there's any other solution other than a dividend, unless Optimus or the shareholders decide to go and expand or go in some other direction, which honestly wouldn't be my first choice. But again, I'll put it to a vote, and I think that's the most I can say about that. It's going to be exciting because, like I said, I've never had a company before that actually did dividends or did share value in cash back to shareholders.
So now think about this. When you have companies out there that are publicly traded and they already have a dividend in place, right? So let's say, because you'll later hear, I'm going to ask him out of that 50 cents, how much of it is going to become a dividend at like IPO? He said like between 10 to 25. It could be even more. And I'll run through the numbers, but let's just use a 25 cents dividend. How much is a company's stock going to be when the dividend is like 25 cents? Well, if we put a dividend yield of 5%, we take 25 cents divided by 5, that's a $5 stock, right? We're buying in right now at 25 cents, okay? So now this is what's possible when you yourself help the company create that dividend. You add value instead of the dividend being already there. When it's already there, then the whole thing gets repriced.
Should be exciting.
No one's going to get a drive-through dispensary at this point. The regulations only allow for those who were approved back before the end of 2017. So we're the last of the last as far as we know, and that in all of California, there's only 2 other drive-through dispensaries. And again, I'll tell you that none of them are on a highway. None of them are on a major highway in California. And the fact that they're all very profitable.
Talking about profitability, the other 2 dispensaries in town, which are not even close location, they make profit of about $500,000 a month. Okay, now this one with this kind of traffic, drive-through, I mean, I can't imagine them not do $1 million of profit per month. Probably more, but like I can't imagine them not do $1 million with this kind of location, drive-through, 200,000 cars per day. I can't imagine anything less than $1 million a month in profit.
And they don't have nearly the access to potential customers that this dispensary has.
How many more capital injections do you expect before the IPO?
I don't believe we're going to need any further injections. I'm going to tell you specifically why, is that as soon as the dispensary is finished, if there is any further capital injections needed, we can put a conventional loan on the dispensary. The current appraisal on the dispensary, as a finished product, we have a proposed appraisal value based on its completion is $3 million US.
Okay, so after we just right now inject a little bit more money to finish the dispensary, there's going to be about 22 million shares. So that 3 million valuation translates into about close to 14 cents per share. And also, what I forgot to tell you before, they recently received a buyout offer for the entire company at 67 cents. So again, we're investing at 25. Buyout offer came in at 67, which they rejected, and then the dispensary is appraised at about 14 cents.
But that is only a fallback position. Our expectations are that that's probably not going to be required.
Well, what were the reasons? Like, why did it overrun?
Well, one was the timing, obviously, of materials, and then materials ended up costing almost twice what the original bids were. The original bids just... Right.
Inflation, supply chain disruptions, we've heard it all.
Basically went out the window. So, and even things like concrete, doubled in price. Things that you normally would not.
Burning concrete plant just 12 miles from here. So you wouldn't expect that the concrete plant and the cost of concrete would double.
I counted it. It took you 6 minutes to get from dispensary to the grow.
Yes.
Yes.
Right? So they drove from the dispensary to the grow, and I'm sorry, I'm not going to show you inside the grow facility because YouTube is going to have a fit if I show you, things growing and it's not for children and all that. So, but that's why I'm not showing it to you, not because it's not sophisticated. It's very sophisticated and automated.
Very short amount of time. So this is the 20,000 square foot building, and inside of here has our nursery, our grow, our Type 7 manufacturing, and distribution licenses, all underneath this one roof.
But these generators have made all the difference.
So the electricity that is used to power this building and power the grow, they use a natural gas generator. And when we invested the first time, what happened, they had to halt production because they had a natural gas generator that broke and they needed a new one. So I'll show you that now. This is the old one that broke. This is the video from 6 months ago when I was there.
That are coming that will go in its place. One will act as a backup. And sometimes they'll run in parallel if the extra power is needed.
Okay, so this is the new one, right? Which was financed with our first capital injection about 6 months ago. And then they were updating us throughout the entire time how, the installation of this was going. So you can see, pouring concrete. And again, this is what it looks like today, working beautifully.
The fact is that this facility can run on one. So we basically have redundancy at this point, which we didn't have before. Like I said, our original generator, which we still have, which will probably have it on Alibaba here the next couple months. Hopefully we'll be able to sell it for $300,000 or $400,000, which is money we're not counting on right now and isn't part of our budget.
Right, so it's right there, right behind him. I thought I had the footage of it, but I just showed you the pictures, but that's where it is.
Certainly would be additional cash if in fact we're able to sell the Caterpillar generator.
So here are the
Okay, so he's going to show us the contract for the manufacturing of joints for somebody else, right?
contracts that we have right now. As you can see, that's us. This is the one that we're currently working on now. Their expected ship date is 1/28, so in a couple of days. And this is how many they want in those days. So 40,000 here. This is another contract, right? And here's an expected date the next month for the same amount to CSPA. Here's the one that we just fulfilled on December 28th. That's the first one that we fulfilled of 40,000. And then so this one we fulfilled, we did such a good job, I guess, on that one, that they wanted to see if we could fill an extra 44,000.
So right now, on the manufacturing side for this contract, they are doing 40,000 joints per month. And this is very labor-intensive work. they're charging about $1, and it costs them about 35 cents. So it's a nice margin. But this same company wants to give them another 44,000 per month, and they cannot take it because they don't have enough people, and it's so labor intensive. So this particular capital injection that we're doing right now and we're investing is to finish the dispensary, but it's also to buy a couple of equipment where it will be able to automate this joint production. So in other words, they would be able to take on this additional 44,000 per month of joints contract and others, because this machine has the capability of doing 8,000 joints per hour, and that translates into about 1 million joints per month. So when I was on the phone with him, he told me that the company that is giving them this contract is his friend. He knows him very well. They are using others to fulfill the joint contracts, and the total volume that this company has is 300,000 joints per month. He said that he could literally get his entire business if he just lowered the price from $1 to 90 cents. So you think about this, and then the cost of production goes significantly lower to about 15 cents because the labor part is only like a penny, because the machine does everything, and then the other cost is the packaging and what they put into it. It's their scrap material. So if you think about 300,000 per month, 75 cents margin, 300,000, that's about 225,000 per month of gross profit that pretty much flows straight into the bottom line, because the operations of the facility are already covered. Now you take it by 12 months divided by 22 million shares. So that one client alone is about 12 cents per share, right? And then they still have the capacity to add on more clients. You're talking about automation, and then you were talking about the joints. So what kind of machine are you looking to buy?
Oh, the machinery is for pre-rolls, right? It doesn't have anything to do with the grow, so to speak. It just allows...
Right, this is on the manufacturing side, to manufacture stuff for others.
Allows us to produce, I think the number was about 8,000 pre-rolls an hour with two people.
An hour,
yes.
You said?
Yes, an hour.
So you Brett told me that you got a contract that you cannot take on without this machine, like a $2 million contract.
Yeah. So that the extra contract that they wanted us to do in between the additional 40,000 joints a month, we can't fulfill that one just because we don't have the capital to lay out for the labor. So yes, we could fulfill that, and I'll get to that as soon as we get to the packaging room. So the next question is, what's the biggest catalyst for the future stock price, and what are you most excited about going forward?
Hard to say about what's most exciting. The dispensary certainly is exciting because the fact that, we're now profitable here on the manufacturing side will be significantly more profitable when it comes time to selling our product at retail prices versus selling it at wholesale prices.
This is what I was talking before. When they grow it and they don't have their own dispensary finished, they can sell it for $1,500 per pound. With their own dispensary, they can sell the same product for $4,500 per month. So major difference in what profitability without really adding much cost to the manufacturing, because it's already produced.
So that difference is anywhere from 40 to 50% increase in profit for the company. And this equipment's going to be exciting in the sense that it will allow us to, more than double, possibly triple or quadruple our production with no additional labor. We can't the labor that it would take to do these additional pre-rolls and the ability to actually be able to do our weigh and packaging through one machine basically cuts out 6 jobs just on the weigh machine, and it does significantly more. It's 6 times as fast as a human. So that's 6 labor components that don't have to be involved, and we can do more products. So
Yeah, I would.
So notice the kind of things that he's talking about. He's talking about a company facing certain problems, right? The problem is too labor intensive. The solution is to bring automation and a machine. We as investors provide a solution to a problem. Anytime you provide a solution to a problem, you get rewarded for it if it's successful. Now, once the solution is already there, that's why the investors, when investors come in, when the company is public, running fully out, the solutions are that the problems are already solved. Well, then the price is going to reflect that there is no more problems to solve, and you're going to have to pay a higher price because we and then the company solve those problems together.
Agree with that. It's the dispensary is the most exciting part to me, just because we get to finally control where our product goes and the margins behind it. It's been a long haul to get to this point, but we're so close. You can taste it, and that to me, that seems like the most exciting part. Is getting the dispensary opening and running that one.
Well, the one thing we want to do is we want to make sure that we're fully operational. When we file for the listing. It's going to obviously be the profitability is going to be the most significant aspect of the IPO valuation. So we want to make sure that we're valued as high as possible, and that, I would say, would be possible sometime late 3rd quarter, early 4th quarter of this year. Everyone, I hope that gave you an in-depth view of Optimus Logistics, and I hope you can appreciate the value of your investment and how far it's come. I know probably Marush, more than most, has a sense, because he obviously saw this some 5-6 months ago. Looked quite a bit different.
Right. So back then, there was just a site for the dispensary, and then the manufacturing side or the growing side, the natural gas generator was broken. So there was nothing growing, and now it's fully growing. And again, I'm not showing you inside, not because I'm trying to hide something. It's because it's cannabis, and YouTube doesn't like that.
Can you take a few minutes and maybe, you talked something about, profit per share of 50 cents. Like, how are you arriving at this? And like, where's the operational profitability of this facility, like now, before the dispensary is finished? Just give us some numbers.
Okay, I would say right now, with the contracts that we're able to produce, we're probably profitable between, I'd say, $60,000 and $80,000 a month, which is going to obviously be enhanced by the addition of obviously the equipment, and then those numbers will increase dramatically with the dispensary. The fact is that those numbers are on wholesale and long-term contracts, and the fact is that those margins are 50 or 60%, and the margins, obviously, the dispensary will make money as well as make the manufacturing and the grow significantly more money. The expectation is that we could very well be somewhere between $500,000 to $600,000 of pre-tax profit this year.
So if you take 600,000 times 12 months, that's 7.2 million divided by 22 million shares. That's about 33 per share, right?
You know, those numbers are not going to be extremely difficult to obtain once the dispensary is operational, and we've been able to, you know, maximize the genetics lab as well, because Casey, I don't know if you had a chance to talk about his the contract for clones, but there's, you know, another $200,000 a month in clone contracts that our margins are, you know, pretty significant.
So they have a contract for, remember how I said that the clones, like the mothers for somebody else, because they have the capacity to produce 50,000 clones per month, but they only need 2. And then they have a contract for 40,000, which right now, because the natural gas generator was broken, it takes time for these mothers to grow. So they're going to start selling those clones in February, and then it's going to ramp up as the mothers get bigger. But if the 200,000 of, you know, profit from their contract is based on 40,000 for. So he's talking like revenue here, 40,000, because they're selling them at $5. So that's 200,000 of revenue, but it costs them $1 to make it. So it's like 160,000 per month of, you know, profit from the contract. You take it times 12 months, divided by 22 million shares. So here's another 9 cents per share, okay? And then the previous calculation that I did was like about 14 cents. So you're already at 22 per share. Remember, we're paying 25, and it doesn't include anything from the growth. It's just these 2 contracts, the clones contract and then the joint contract. Doesn't include the dispensary, and doesn't include, you know, selling their own brands to the dispensary. It's just these 2 contracts. So you can kind of see the opportunity here.
Yeah, so we sell it for $5. It costs us $1. So all of these pieces, when you're fully integrated, I mean, we're integrated from the genetics all the way to the customer, and we're going to make money at every stop. So again, we have the benefit of 5 licenses that cover, you know, everything from the nursery to the retail dispensary. There's absolutely no reason to expect us to do anything but increase the profitability. And like I said, we only became profitable just barely in December, and this month we're significantly more profitable, and that will continue.
So how do you arrive at like profits at 50 cents per share?
Well, if there's, let's say for argument's sake, we're at 22.
22 meaning 22 million shares.
And we're doing 6 million by, say, June.
So 6 million divided by 22. That's 27 per share.
That expectation would be that for 2024, we should be somewhere around 1.5 million a month.
So 1.5 million a month, which includes the dispensary and all the other things, clones, joints, all the other things working. So 1.5 million times 12, that's 18 million divided by 22 million shares. That's actually 82 per share, not 50. So it's actually higher. But, you know, you can include some margin of safety there. But the dispensary, like I said, the other dispensaries in town are doing $500,000 of profit per month. I mean, this dispensary alone, I wouldn't be surprised if it does 3 times as much as they do, just because of the location. So the 1.5 million per month could be the dispensary alone. Obviously, selling the product that they grow, and then all of the contracts for other companies, whether it's selling clones or making joints or whatever other things that they do, that would be in addition to that.
If clones are working and the grow's working and we're automated and the dispensary's at full, because right now the dispensary, if you look at what its potential is, could be $1 million a month. So that.
Yeah, so he's just using the number $1 million a month, because double with the competitors, with horrible locations. So I think the dispensary will do a lot better than that.
That potential
now,
is
when you
there.
look at your competing dispensaries, how much are they doing per month?
Together, they're doing just over $1 million, and both of them, again, are off the beaten path, and they obviously won't have the diversity or the amount of material that obviously we have to offer, and they don't have the pricing structure. There's no way in the world they can compete with us. They don't grow. They're buying wholesale from the people that basically we're growing for.
What's happening with the retailers right now is they are just now figuring out that they need to work with people like us in order to get their product cheaper, right? And so because we're the ones that make it, they need to go straight to the source. And so instead of us having to go to somebody else, we now can make everything in-house and get it straight to our dispensary. And I mean everything, right? So that's what's happening in the industry right now. That's why our white labeling is we're getting a lot more interest from stores that we already have our products in, and they see it, right? They know our story, and they know what we have, and so they come directly to us and say, hey, can you white label for us? Can you package for us? And that's exactly what we want, right? We want to work with these stores because they're the highest margins. If we work with a brand, the brand wants it at a little bit cheaper because they have to now pay a distribution company to deliver their product to the stores at a wholesale price. To where the retailer, if we work directly with the retailer, they are selling it at the retail price, right? They don't have to go through anybody else. So that's what's happening right now. And then as far as the clone contracts, yes, we work heavily with Natura, which is up in Sacramento. It's a 200,000 square foot grow that they've given us specific genetics of theirs. And that will start back up in first 2 weeks of February. We'll have the first 2 strains going out to them. And the minimum that they can take in is 200 clones per strain. So they've given us 16 strains to basically grow up in our nursery and cut a minimum of 200 per strain. They've got a huge appetite over there. As you can see, we have 10,000 square feet of grow. They have 200,000 square feet of grow, right? So their clone appetite is immense, and they could take up to 40,000 clones every single month.
What does this mean in terms of profitability?
Well, that's where Brad was talking about. It costs us $1 to grow the clone, right? And then we sell them back to Natura at $5, right? So that's an extra $200,000 in profit every single month.
Okay, and that starts in February.
Yeah, so it's going to be a ramp-up period, like you've seen back in the nursery. There's some rooms where a lot of the mothers are still small, So we can't cut off of those until they grow up. So it will be a ramp up period, but that will start in February. We'll get a couple hundred clones out to them, and then that'll turn into a couple thousand clones, and then that'll turn into tens of thousands, right? As our mothers grow up back here and we can cut more clones, we will be able to provide them with more clones. But as of right now, we're on schedule to deliver the first fulfillment the first 2 weeks of February.
Now, Brett talked a little bit about the joints, and then the machine, but you never, you didn't talk about it. So can you talk about it?
Yeah. So as you've seen the contracts that we have for the joints, I mean, that's in upwards of 84,000 joints every single month. And right now it costs us about 35 cents to make a joint. And the time that it takes is really where, where that machine can cut that down. The market for making joints is about $1 per joint. So right now we're charging about $1 per joint to do that. So the margins there are pretty thick. With machinery, obviously, our labor costs would go down.
So with this current capital injection, we are financing the finish of the dispensary and then the purchase of this machine that he's talking about.
As well as, margins go up, but we're able to take on more than 84,000 joints a month, right?
So this is what I was talking before, that right now they can do 40,000 a month, and they can't take the contract for additional 44,000 because it's so labor intensive. And with this machine that they're going to buy, not only will they be able to get the 84 per month, this particular company does 300,000 per month, and it's his. He knows the owner very well, and then if he can bring him in and show him the machine, he said he could probably get the entire 300,000 if he gives him a little bit of a better deal. Instead of charging him $1 but 90 cents, he can probably get the entire 300,000. And then the capacity for this machine is a million per month, as he's going to say. And so then he could take on more contracts, which right now he can't because it's so labor intensive.
That would be a drop in the bucket if we had this machinery. Plus, we could give higher volume customers a more favorable rate with still capturing that margin. So there's no shortage of work out there. Pre-rolls are a very hot commodity. Everybody's making them, trying to make them, sell them, package them differently. And if we had a way to do that, there is no shortage of business that I could be able to bring in for that. The reason why I chose just to work with this company, right, is because they have the volume of 88,000 or 84,000 joints every month. I could go to 5 other companies and get the same volume, but then I'm having to contact 5 different people, and we've got to do it 5 certain ways, and we've got to now test 5 different batches. So I chose to work with this one company because they have the volume. I only have to deal with one person, one way of doing things, one distributor to send them to, and so on. But there are a handful more companies that need help with this sort of thing. So if we had a way to bring a machine like that in, it would solve a lot of problems, increase profitability, and lower our overhead costs. Or we shift over the people that we have in place to pick up vape cartridge filling contracts, right?
Now, how many? What's the capacity? How many can you take on per month with the machine?
So it does about 8,000 joints an hour. So multiply that by 40 hours in a week.
So that's where I get over $1 million per month.
Times 4.
And Casey,
That's a lot of joints.
Yeah, can you speak a little bit about the quality of the material? Because who we're growing for and the genetics we have, our pre-rolls are better than everybody else's. So it's not
Yeah,
just that we can do them, it's also the quality. People go back to the best possible pre-roll, right? And Casey, maybe you can speak to that a little bit.
yeah, and right now, there's kind of a level to it, right? We are an indoor grow, meaning our grow is inside of the facility. It's in controlled atmosphere. You have outdoor grows and you have light assist grows that are under tarps, right? The lower level of the spectrum is going to be your outdoor grow. That's going to be your cheapest material. It's going to be run of the mill kind of Bud Light, so to speak, material, right? And then obviously the opposite end of the spectrum is your indoor grow, where it's controlled, temperature controlled, light controlled. Everything's the perfect environment that it can be in. And so obviously that material, it costs more because it's better, right? Everything's controlled. You can't control anything out in the elements. So the people that we work with, there's a demand for our stuff just because of the people that we work with and the genetics that we have. So the material that comes off of it that goes into our pre-rolls that we make, people want that as well, right? They want every piece of the plant that we grow because of the genetics. So it's not only are we able and capable of manufacturing it, but it's also the material that we put in it. Having that machine, having that capability will not only allow us to increase our margin for the current contracts that we have, but also take on more from other companies. I can't tell you how big of a relief it will be when that thing is open and we are.
He's talking about the dispensary now.
We're turning our $20 eighth into a $40 eighth, right? So that's, it's just, and that extra $20 is pure profit. That's simply because we hold a retail. That's the only difference. And it's crazy to think about it that way, but and then obviously pushing as much product of our own, right? Right now we have 2 in-house brands. As soon as we open those doors, I'll be printing, 4 in-house brands per shelf, right? So we can take advantage of and own a majority of the shelf space in the dispensary. That's how, if you're familiar with any of the bigger operations like Cookies or Stizzy, those are other big brands that started out as a brand and realized that they needed their own retail stores in order to control their output. So they started partnering and buying and doing everything that they could to get as many retail stores as they can. And for the reason,
but you're not gonna carry other brands in your dispensary, or you will?
Absolutely, yeah, we will. But it's going to be an 80% heavy us versus a 20% other brands. We will carry. I have friends in the industry that have some of these major anchor brands. We could even carry Cookies, right? And that will draw a lot of people in. But as soon as they realize that they can get a same product or better for $5, $10 less, you'll see products being bought over all of those, right? So that is the goal, and that's actually what Cookie's business model, Stizzy's business model is. Both of those are large brands with retail stores, multiple different retail stores all across the state and the country. This year, they are moving from a 60% their own in-house brands to an 80% their own in-house brand. So they're pushing a lot of other brands out of their stores, and they're creating new brands to take over their shelf space. So that is, we should be following that business model as well. The more of our own brands and own product that we can sell through our own brands, the better margin. But you still need those anchor brands and other brands to draw people in.
the last question before we finish just popped up. With the cash flow in mind, when we IPO, what will be the projected dividend at the time?
I'd like to think it's at least somewhere in the 10 to 20 cents range minimum, which would be unheard of on a probably a launch of a cannabis IPO. I don't think there's another cannabis company anywhere in the world paying a dividend. So that in itself is going to have a significant impact on the valuation of the stock. So again, we'll find out. But initially, my dream would be 25 cents because I think that's a spectacular number for a dividend, and we'll see. It might be more.
Okay, so it obviously is going to take some time to ramp up. That's why he gave a certain number for June and then for 2024. But now, for the calculation purposes, let's say at some point, a couple years down the road, they're able to pay 25 cents in dividends. How much do you think it would be priced? Well, you can use, if you use 10% dividend yield, then the stock would be $2.50, right? Remember, we're paying 25 cents right now. And we're also getting half a warrant at 50 cents. If the dividend yield would be 5%, then the stock would be $5, right? So let's say you invest $10,000 at 25 cents today. You get 40,000 shares, right? So those 40,000 shares at $5 would be worth 200,000, right? But now 40,000 shares also gets you half a warrant, so that would get you 20,000 shares, and that the difference between 5 and 50 cents, which is the exercise price for the warrant, that's an additional value of 90,000 plus the 200,000 from your shares. So you take 10,000 and you turn the value into 290, but then those 20,000 shares, you have to exercise it. So there's an additional cost of 10,000, but you can sell some shares and then take the money and exercise the warrants. So anyway, you heard it yourself. That's an opportunity we're involved in. If this is something that is interesting to you and you want to be part of it, you have to become a member of Microcap Explosions. The link is, the discounted price for MCE is in the description below. So that's it for this video. That's what we do.